Hi everybody, I'm Mike Rooney from Matt Realty, and today joining me is Jeremy Heeney, who's a lending advisor. Welcome, Jeremy.
Thanks, Mike. Good to be here. The very start of that process is a budget. What can you afford to pay per week or per month? Whether that be a home that you're going to live in or whether it's going to be an investment, and you need to consider factors such as rental income. Look, whilst deposit is key, the greater the deposit, the better your chances, the easier the approval process. It needn't necessarily be the determining factor. There are a lot of lenders out there that will advance higher loan to value ratios, so 95% of the value of your purchase up to 98% of the value of your purchase, and there are others that will advance 100% with the use or support of a family member or guarantor. Buying a property is a stressful thing for many people. Whilst it's exciting, it's stressful, and often you're under a tight time frame, 14 days or 21 days for finance. I can't express enough the importance of getting a pre-approval. Meet with your lending advisor gives you an opportunity to consider what sort of product, being variable rate, fixed rate, or a combination of the two, what type of lender, who the lender may be, what fees are acceptable. Look, a good lending advisor can empower you to negotiate strongly and effectively. I mean, you don't want to miss a house over $20,000 when that $20,000 might only be $65 a month. You know? So for the sake of $65 a month, you're in the car next Saturday doing it all again. I find people miscalculate, Mike. They assume that they're borrowing 95% and therefore they only need 5%. The reality is that the 5% can be substantially more when you factor in things like conveyancing, stamp duty, legal fees, transfer fees, pest and building inspections, and so on. So your 5% might be closer to 8 or 10% before you know it. You don't really have the time to go to 5 or 6 different banks to find out what the rate is, what the product is, whether or not you meet the parameters. You can go to an independent broker such as myself, and I can give you that answer across 27 different lenders. And with the spread of interest rates being as much as 1.5% on an $800,000 home loan, that could represent a $12,000 a year difference. It's $1,000 a month. It's not insignificant. I would urge people, speak to a good lending advisor. Speak to me. I'll guide you through the process. Make sure that you're aware of all of your costs, all of your charges, and prepare you for that, for what is the biggest decision in your life, the purchase of a property.